I think we're fixed. For everyone who's just joining in, should I restart? No, let's just keep it going. Screw it. We're going to keep it going. We're not going to restart the video. For those people watching the replay, I am sorry that you just had to experience the last 3 minutes of technical difficulties. Skip ahead. So William, welcome. Andrew, how you doing? Tommy, good to see you on. Brian Smith, Michael Chung, Alan Grace, Andrew Howe. All good. And Tommy says all good now. Perfect. Welcome to the Wise Wealth Show, where I basically answer live questions. We do live question and answer. I do free coaching. People bring up their specific challenges and problems they're having issues with, whatever. And I try my best to provide free answers without any preparation. So it's on the spot, live analysis of whatever it is that we're trying to solve. And basically, I've been doing this for 7 years. I don't know, we'll call it probably 18,000 hours of experience doing this on average. That playback is really killing me. I'm going to unplug that. What was that? Getting reverberation. No? Just the headphones? Okay. You guys can hear me okay? The sound is coming in all right? Again, I'm shooting live from the tiny house today. We got some loud construction stuff going on at my house, so for a number of reasons, I could not shoot from my house. My studio wasn't set up, and so I just jumped over and hanging out with Kyle here. We're in the tiny house. So for those people if you're newer to the channel, maybe I can show you. There's a loft up there. There. Did I screw it up?
Screwed it up.
All right, Joby. Joby, get back on the stand.
There you go.
Screwed it up here. This is a big, heavy camera, too. I suck at life. Sorry, guys. Okay. Don't rest on the computer. You can do better than that. You dang Joby. All right, we've probably lost everyone. For anyone who's still here, nope, that looks bad too. It was a mistake. It was a mistake to take it off the stand. Can people see me? Better? Jonas, how you doing? Can people see me? I got the camera kind of really on an angle. Maybe Kyle can fix it. Kyle, want to try to fix it? See if you can make it better. The Joby pod legs are all kind of like finagled. So I apologize for that for the next minute or something we are going to deal with. Oh, we got it. There. Looks better. There. Yeah, we're still on an angle, but it's okay. It's better than it was. Better than it was? Okay, people can hear me. I don't know if the lens will focus on my face. Can you see my face? Okay. We're talking today about whatever you guys want to talk about, but I can update you what I've been up to. Crushing deals. If you follow me on Instagram at Mike Rosehart, you'll know that I've crushed 9 new property acquisitions in the last 9 days. That has been hell. The amount of work associated with closing 9 deals between talking to investors, getting financing, appraising, renovations, putting new tenants in, et cetera, setting up all the systems, putting the utilities in the properties, et cetera, et cetera. There's a million things that we have to do to get our systems in place on 9 new acquisitions. And there's probably 100 hours of property. That's 900 hours of work for the next month. Now divide that by 4.3 weeks. How much work is that for me to do? A lot. Thank God I have teams. Thank God I have people. Thank God I have the A-team to help me out and get through this. My business partner is on vacation. I hate you right now. If you're watching, Way, you know who you are. You are in Las Vegas right now, enjoying your life for the next 3 weeks, and I'm stuck here surviving. Today was a busy day. I had a lot of little things come up. Well, let's kind of update you on this week. So crushed 9 deals. Real estate agent trying to pick a brokerage. So those people who are following, you guys know I'm now full-on real estate agent. Trying to pick a brokerage. Interviewed like 5 or 6 brokerages. Very hard to find one that is a good fit. Looking at some independents, looking at some bigger firms, ones that make the most sense. I'd like to be able to build a team of a few different agents working with me, just because I don't want to be doing buying and selling of houses consistently. I would like to delegate and co-list a lot of the stuff that we're doing, but we need to have a pipeline. So not just wholesale. There's a lot of MLS stuff. Believe it or not, I'm talking to agents that do 50, 60, 70% of their business off MLS. So they're bringing private clients through pocket listings. So nothing's hitting realtor.ca. Tons of properties sell that way. Hundreds of properties in London sell this way. And you need to be tapped into that because it's not going on MLS. You're not going to get a notification. You just need to know the agents. They need to call you and You need to be in their back pocket. And so that's really important, I think, for me from a business management perspective. So that's what I've been up to, is crushing deals, looking at a lot of properties, putting in a lot of offers, working on getting tenants out of properties, finding them new places, putting new tenants in at higher rents, renovating properties and making them nice. And of course, my own house has been going under some renovation. It's now becoming the firehouse. So the financial independence, retire early, RW house. So I might have a few people, I'm thinking maybe three select individuals who get to mentor me and work with me. And so I might not charge them nothing. Most people charge $100 an hour, $200 an hour for consulting. All I ask is a commitment of time, and they give me someone has an opportunity that they can give me back time, and we can trade basically time for mentorship. I will basically discount the mentorship to zero cost if someone trades me time. They can learn everything about this business, and in return, we can get some help. That's going to take me a lot of time in the beginning to train people, but the people who are in this business on the ground floor at the beginning definitely have a chance to. I'm letting the questions kind of pile up here because I'm just going to do rapid fire question mode. So I see your questions, Don. I see your questions, Mike. See everyone kind of jumping on. I will get to your questions in just a sec. Just updating you what I've been up to, because usually the first 5-10 minutes I just talk, and it gives everyone a chance to get on, to get the notification, to jump in. I do want to stay at the start of this. Thanks so much to Graham Stephan. If he does end up watching this live stream, thank you so much for the plug today. About 9 or 10 minutes in his most recent video, How Anyone Can Become a Millionaire in Less Than 10 Years, he plugged me for like 10 seconds, which was super cool of him to do. Super appreciative of that. For those people that get 11 minutes into his video, I know most people click off the video in the first couple of minutes based on YouTube statistics, but for those people that get there and who are new to my channel, thank you for finding me, and welcome to the channel. There's lots of cool stuff on here for real estate and personal finance and all that kind of stuff. We're over 4,000 subscribers now. We're shooting for 5,000 for the new year, and then my goal for next year, stretch goal, would be 25,000 subscribers. But again, just a stretch goal. I've got to obviously prioritize that with family obligations and a number of other things to live a balanced, quality life. Because at the end of the day, it's really important, I think, that we prioritize the things that are of most value in our life. It's not just about making money. It's not just about helping people. It's not just about building a real estate business. It's not just about buying properties or whatever it is. Your goals have to be balanced and moderated and tapered. I think it's really, really important to do that. So Michael Chung, excited to see you in January. I think you'll be one of the 3 people who will be doing some mentorship. So I'm really excited for that. For other people who are out there maybe want to join in too, there's always opportunity. I think the people here on the ground floor, it's like Apple or anything else, where some of the people at the ground floor are going to get options. They're going to get the option to buy in at low prices way before our company builds into something big. And there's huge opportunity. The people who are here at the beginning that grind for like 3 to 5 years with us, those people will be taken care of. There is no doubt in my mind about that. And my new video, you're going to find out that I dropped this Saturday. I had this really cool idea for a charity using the same real estate strategies that I use now to buy property and basically donate the profit. Say we're making $1,000 a month in rental income, donate all of that to different local charities and actually maybe even starting working with local charities on those things. So some really exciting stuff coming down the pipeline. What else have I been up to recently? Oh, today I had some nightmares. I had really bad heating and cooling contractor experience with someone who basically did a hack job on my furnace, and my furnace was leaking into my basement, created a huge inch of water flood in the furnace room and destroyed a whole bunch of stuff, and it's created a bit of a mold situation, which we are now remediating. So I opened the door and it was a huge negative surprise in that unit, which I had to deal with today. So that wasn't fun. And I saw this fourplex today. It was the worst building structurally I've seen in a long time. So that was fun to see that property. I did some Instagram story shares on that. So that's what I've been up to. Just saw you on Graham's video. You guys are my 2 favorite YouTubers. Jason McLeod, thanks so much. Thank you guys. Appreciate the support. I'm here to share with you as much as I possibly can. The reason my channel probably isn't blowing up is because I'm just too authentic. I need to get better at more refined and more polished. I'm just not a polished guy. I tend to be very authentic, and I'll just say what's on my mind. I'm blunt and to the point. And sometimes I'm not very concise or marketable or pretty with how I share the message, but it's there. Anyone can do it. The knowledge is here. I know people prefer entertainment on YouTube instead of knowledge. And people are telling me, hey Mike, you should make entertaining videos people can watch if you're walking through properties and funny skits, and then direct them to a course where there's the core knowledge. But honestly, I'm all about sharing the knowledge right up front for free. I don't have any interest in selling any courses right now, so for me it's just free. And that's what this is all about. That's what the Wise Wealth Show is about. It's free coaching. So that's what today's video is titled, is free coaching for you guys. Bring your questions, bring your concerns. I'll answer them for free. Uh, Not many people can get access to someone who's got 50 properties and all this wealth of knowledge for free. And so you guys can. My loyal subscribers, you can. You can jump on and we can do that. Michael, I see your question on there. Why is he's not usually always on vacation, but in this case he is. And I'm going to make him grind. He's got his phone with him, like he's still working, but I mean, he's not here. So anyway, let's see if we can't get some of these questions banged out. Andrew Howe, Jonas, how you doing, man? Good to see you on. William Burkhead is here. Tommy says, I wanted to know your opinion on the interest rate situation and if you think people taking on massive mortgages in areas like the GTA may foreclose eventually. I know there is a stress test, but still. Tommy, great question about interest rates rising in the prime rate environment. There was a time where prime was pre 3%. Now it's like 4.5%. Even there's talk of it prime becoming 5%, right? And we could see mortgages at 4.5% rate of return. And I think that the key piece to remember here is when you're buying property, you need to be doing a sensitivity analysis. What that means is you basically take the revenue or the rent coming in and you say, what happens if I had a 10% vacancy? What happens if rents dropped 15%? What would happen? What happens if, and play with your interest rate too, what happens if my interest rate goes to 5%? What happens? Can my property still break even or cash flow? And that's the question you need to be asking yourself when you're buying properties. Do I think these people in Toronto are doing that analysis? No. I think their agents are probably duping them into buying property based on speculation and appreciation or gentrification, hopes and dreams. And I think that in reality, we've had a really good bull market in real estate. And there are still some solid underlying fundamentals. Specifically, I think that minimum wage is up 35%, something like that in the last few years. And so that's jumped rent affordability a ton. And rental income rising creates higher net operating income, which then creates higher property values. So in a place like London, most of our growth has been, I think, perpetuated by the increase in rents and the increase in operating income. That's why we've seen apartment buildings on places like crappy streets like King Edward. It's like the worst apartment building street in London I can think of, actually. I can't think of a worse street where there's shitty apartment buildings. It's King Edward. You're seeing apartment buildings selling for $1 million list price, and they're not too long ago were selling for $500,000 because the rent roll has increased. The rents have gone up. That's why the buildings are more expensive. And so it's kind of crazy that this is kind of happening at the same time as buyers like from Toronto are selling property and seeing London as a haven all the way along southwestern Ontario. London being less than 2 hours drive, it's still much more affordable than places like KW or Hamilton and such. So we are obviously driving in a ton of investors and investor capital. Do I think, to get back to your original question, will we see more foreclosures? Yes, definitely. The default rate in Canada was around 2 or 3% traditionally. So we traditionally would see 2 to 3% default rate on mortgages, which is very, very low. Most Canadians don't default on their mortgages. But those people that do, increased interest rate environment, if they chose a variable rate mortgage and their mortgage has gone up a ton, maybe they can't pay the bills, maybe they're following the Keyspire or one of those models, making $100 a door cash flow, and that's not enough. So those people, obviously, when push comes to shove, an interest rate environment gets not so great, such that the interest rate levels are climbing, what we're going to see is a whole bunch of people lose their shirts because there's not going to be the appreciation they were hoping for. They're going to have to hold and start throwing money into their properties. Now here in London, if you're buying with my model, where you're basically buying for cash flow and arbitrage together, very, very important. Arbitrage meaning you're buying undervalued, under market property. So you want to be buying at a bit of a discount if you possibly can. And if you're buying at market value, you want to have a strategy to add value to the property. So that's what I've been good at doing, is finding ways to add value to property strategically through putting in the best kind of tenants, through strategic renovations, through getting city allowances and rental licenses, maybe when there was none before, duplexing when there may be single family properties before, to squeak out that extra rent and find a way to run the property slightly more efficiently. So those types of strategies definitely are going to help, I think, insulate most of my investors and myself, my own properties, from this type of recession. If a recession were to come, all myself and my investors, we would just hold and continue to cash flow. Most of us are on fixed rate mortgages, and so we would be 2, 3, 4 years before we would even need to worry about refinancing our properties and getting a new interest rate on our mortgages. And here's the thing, the interest rate environment is such that in 2 to 3 years, things might come back down again, right, will be that the higher interest rates likely will create some sort of market cooling, right? And then they'll have to drop rates again to increase the economic viability for business, right? So as interest rates rise, it's worse for business owners. They have less cash flow. People are investing less in employing people. As interest rates decrease, what you typically find is that stimulates the economy. It's an economic stimulator. And so it'll create business. People start borrowing. And that's kind of what created this huge boom we're in right now is 2% fixed rate mortgages at three-year fixed for 2%. I was seeing a ton of that. 1.84% 2-year fixed. People were getting really cheap money. The bank was just pouring money. Real estate was driving a lot of this recent boom. And so each real estate transaction would create a ton of jobs for lawyers, real estate agents, appraisers, contractors to do all the renovation work. Then places like Home Depot, Rona, that employed hundreds and thousands of people for raw materials and all those types of things. All of that industry had a trickle down effect that really was a boom for the overall economy. So that money's been spent, and it's been spent wisely to grow the property values. I think there's a certain floor in real estate pricing, and so there's a certain floor that I don't think we'll ever see like a 50% drop in real estate. I just don't think it's possible, assuming contingent on one thing, contingent on net migration being positive. So immigration into the country is assuming people are going to continue to come into Canada, and Canada going to be a great place for people to live. So as long as people want to continue to live in Canada, and we continue to allow people to come into Canada and it's a desirable place, we'll be fine. We have the fastest growing population in the last 6 decades. So things are really, really good in Canada right now. It's the number 3 most coveted country to live in the world right now. So Canada is standing to be fairly good. Now, if we had a major war or something happened, that could obviously affect the entire economy, and with that, real estate would be affected. But I think if we can hold and have rental income that is way higher than our rental property expenses, we have good cash flow. I like to say to my investors, if we have no appreciation, and let's say I suck at buying this property. Let's say I bought this property for 200 and it's worth 200, which is never what I do. I always buy at 200, it's worth like 250. I always try to have margin there. But let's just say I did a bad job and we bought at market value. I aim to have your deposit, your entire down payment back to you in maximum 3.99 years. Maximum. You should have all your money out back in your pocket. So you're in 3.99 years, you have no money in the property. Now, if things appreciate, if we bought below market value, if we renovate and add value, you can get your money back way sooner than that. I have investors with money back a month after we bought the property, all of their money out. Jason, I'm talking to you. Now we've got all the money out, right? So you're negative money. You bought negative 10% down. The bank the mortgage registered was more than the purchase price. So as an example, that can happen too. In those situations, I don't think we care if the property drops 10, 20%. We don't have any money in the property, and it's cash flowing really, really well. We're looking at fistfuls of money every single month profit. That's important. That's a good economics or good real estate investing strategy. A lot of other strategies, not as recession proof. So just be careful. Maybe not as much upside with my model. Maybe you're not going to get the kind of appreciation you would get because we don't play for appreciation. We play for arbitrage and cash flow. But yeah, so I do think though that the stress testing with the mortgage, that was the last piece. The new stress testing rules for the federal banks and federally mandated, I think is, or provincially mandated, I think is definitely going to tighten things so that people who shouldn't get mortgages don't get mortgages, which is a good thing. We don't want ninjas getting mortgages, right? Ninjas being no income, no job, no assets. We don't want those kind of people having property anyway, mostly because if something happens, they have no reserves, or a furnace goes or a roof goes, they don't take care of their property. And so you want to have a little bit of savings, beyond just what you're putting into your property. So when I say when you buy a property, have a line of credit available or some means of capital to repair your property. It's not a good position to be in when you're fully levered, you have nothing but whatever's in your property. So sort of my quick thoughts. Okay. Next question. Smith Brothers. Edward Smith, how you doing? The Smith Brothers are on. Good to see you guys on. Welcome to the live stream. Jonas is here. Phil Williamson says you're good. Looks good. All good. Okay. Andrew Howe. Tommy says there are always ways around it. But would you think there's a potential catalyst for real estate decline? We can get 30-year fixed rates like the States here. I don't think you actually can't get 30-year fixed rate loans like you can in the States. The largest I've seen is a 15-year fixed rate loan. Now I know vendor take back type deals. I've seen people get vendor take back deals for like 20-year fixed. If two people can agree on that, that's amazing. You can do that. That's awesome. But for the most part, what we see here is a 5-year fixed term or 5-year variable term is the way our mortgage interest term is done. Now the amortization schedule is 25 or 30 years very commonly in Canada. you just have to renegotiate the interest rate every, say, whatever your interest term is. So if it's 5 years, every 5 years you renegotiate your interest term. That's how it is in Canada. In the United States, you're way more insulated, way better off actually, because you can actually fix in for like 30 years at a fixed rate, interest rate. Now that might be a good thing if interest rates rise, right? You're fixed in. Usually the U.S. rates are higher than the Canadian rates, about 75 basis points, so about 0.75%. But you get that security of being locked in for a really long time. So there's some distinct advantages to that. I don't think we'll ever see interest rates of like 8-9%. I just don't think the 80s or 90s are possible again. The current debt levels most countries have, it would actually create a global recession. So they would artificially, the banks of Canada and the Federal Reserve would step in and artificially force interest rates down. I think that'll be what would happen. So we know that likely interest rates won't reach that kind of point again. So that's my kind of thought on the situation. And I do think it's possible we could have a recession. Be prepared to have a 10% drop in property value. Now, what we're going to see is going to look like something like this, right? Like a stock chart. You guys see that? Yeah, my line is, I'm drawing like the volatility in the stock chart. But what trend are we seeing? What's the trend line look like? The trend line is moving in one direction, sort of up, right? A slow 3 to 5%. So we might have a time of 5 years where, from here to here, it's down, but then for it to come back flat, it took 5 years. There might be a 5-year period wherein you have, you're underwater in your property. And that can feel really bad, which is why I recommend, having strong cash flow. Because through those times, if you're cash flowing $1,000 a month, and what we found is that rental properties tend to be more coveted in times of recession. In fact, rental demand tends to increase because people can't afford to buy, they have to rent. And so what ends up happening is rental demand stays relatively flat or even a little bit stronger. But let's just say it even declined too. As long as you have that margin in there, if you're making $1,000 a month, all of a sudden a recession hits, your property value drops. Let's say no one wants to rent. It's just like not going to happen. But let's just say it did. Your income could drop to $800 a month or $700 a month. At least you're not relying on a model where it's $100 a door. That kind of model is very risky, I think, and you got to try a little bit harder to make sure you don't have your rents drop in those situations. So, are we still live? This is a live stream offline. I think we're still on, eh? Someone tell me if we're still live. I think we're still live. Okay, good. Just a computer glitch, I guess, with the software. It was just saying we were offline, but that might have been from the last one that I canceled. Okay. Don Trin, how you doing? Just wanted to come say what up, Michael. Catch the replay tomorrow morning. Loved your last video, by the way. Thanks, Don. Really appreciate that. Yeah, talking about personal holding versus corporate holding, really, really important stuff there. And of course, the answer is it depends, and there are many different nuances associated with that, where different structures make sense beyond the 3-tiered corporate structure, where there are many different structures that can make a lot of sense. So, of course, consult your accountant and be wary that your accountant is going to get paid by doing $2,000 to $3,000 a year in corporate tax filings. So, we want to find a good accountant who's unbiased and not going to try to just basically make some money from setting up some corporations. And same with your lawyer, whose job it is to protect you at any cost. And my job is to look at the cost and say, hey, is the cost benefit analysis? Does it make sense? Does the $5,000 a year in extra cost actually provide any real value, or should I just spend that money on a good insurance policy? And the difference would just be my tax losses with this personal setup. So sometimes the personal setup makes way more sense, where you can carry forward losses against your personal job income and have no tax. I went like 2 years with paying almost no tax and getting refunds because my properties were at losses in the first 2 years while they were vacancy and I was renovating them. And of course, in the future, that they're going to be worth a lot more, but I don't pay until I sell. And so you can kind of lock in those gains for a future day and use properties like an RRSP to shelter. And like you don't pay on your property until you sell. You can have property you bought for $100,000 worth $100 million, and you don't pay any tax on that, even though you have $100 million in assets. You wouldn't pay a net worth even. You wouldn't pay anything until you sold that property. So you could borrow all that money, go to a bank, get a mortgage on it for $90 million, get that $90 million in cash in your hands, and still pay no tax until you sell that asset. So you can create these really cool tax liabilities, and you choose the year in which you sell your property. So you could then theoretically income smooth over years where you had less income. You just sell a property in that year. So that's the beauty of real estate, one of the beauties of real estate. And you gotta be very careful and intentional about how you buy property. I now have corporate structures set up, but that's because I'm at a point where I'm doing a lot of transaction, a lot of income coming in. I still hold 8 properties personally for very good reason. So you can check out that video that I dropped last one about best legal entity and structure. And of course, it depends on your situation, and I could not have covered all of it in one video. There's a ton more. I could have a 2-hour conversation with individuals about some of the nuanced pieces that maybe I wasn't able to cover in that one video. So bring that up here if you do have your individual questions. Happy to give you free coaching on that live for everyone to watch and everyone's benefit. I prefer that to one-on-one conversations. I get a lot of Instagram DMs and things. I'd prefer to answer the questions in the comments on a video or on the live stream for Wise Wealth Show, because it actually allows other people to watch and spectate and gain value from that. So maybe just kind of conceal names if you're worried about privacy stuff, but it really does. It's the way like Tony Robbins does his one-on-one healing. If you've seen some of the stuff, like I'm Not Your Guru that Tony Robbins did, good little Netflix documentary. He does that process in front of everyone because he wants to have a message or teach people about a key learning piece. So that's in a similar way I like to also share and teach. Hello, Ellie. Good to see you on. You're regular as well. Yeah, Kyle, that's right. I mean, it's okay. No big deal. Kyle's sitting beside me here. I saw your comment. Mike says, my goodness, 9. Yes, Mike, that's right, 9. Mike, I have a question about liquidity. Turning 3 projects at once, so painful. How did you get 5 at once? Yeah, William, great question. It is very painful to turn multiple properties at once. Trying to manage just all of the subs on each property and keep the materials flowing and keep all of the pieces of the puzzle moving and kind of keep things out of the cogwheel so that the wheels keep turning. It is very difficult. You have to learn to build systems and you have to delegate. Very important. You can't be doing everything yourself. Very, very important. So yeah. Don Trin says, hey, Michael, I'm getting close to finishing one of my student rentals. How do you put your students on one lease? Is it one tenant on the front page and others sign and name themselves in an appendix page? Yeah, so there are several ways you can do it. You could just put, sorry for that, I just kicked this desk. You could just put in all the tenants as tenants on the lease. So you could have 4 tenants, the same as you have 4 family members sign a lease. That's one way you can do it. I usually put everyone on one lease, and then I have a sub-lease, or you call it like a lease and then a sub-lease. And it's basically a non-official lease that says you are responsible for this portion of the rent. What I really like to do is get everyone all on the same lease, and if one person buggers off, I make the other 4 pay for the 5th person, and their parents are on as co-signers as well. So very, very important, I think, to ensuring that you get the rent from the students. So just be careful about that. I don't like to do by the bedroom. It's not a great way to do it. Sometimes you're forced into it, but rooming houses suck to operate. Collecting rent from individual people, we have, Wei and I in our portfolio and the company and all that, probably, I don't know, 130 tenants right now. Could you imagine collecting rent from 130 tenants? I think of like 10, a handful, that make us collecting cash every month. Such a pain in my ass. I mean, going and driving and physically getting cash, that takes like 5 hours on the first. That's a whole day just collecting rent. Send us an e-transfer, one e-transfer from each house or each unit. I don't want to be coming and collecting from 5 different bedrooms in one house. Like, just send us one e-transfer. So we're very intentional about setting up one lease from a time perspective, and you guys should be too. Definitely the better way to do it. Okay, great question, by the way, Don. Don Trin. Don Davies now asks, do you prefer variable or fixed rate mortgages? What kind of flexibility do you look for in mortgages? Don Davies, currently I read an article recently. If you look at the bond market, some of the information is currently saying that what we're seeing is that variable rate mortgages now make more sense. Fixed rate mortgages made a ton of sense in the last year or so, and before that, variable rate mortgages made a lot of sense. If you believe prime is going to be hiked up 2 more times, so 25 more basis points times 2, so 2 more hikes, then it makes more sense to fix in. If you think there will not be more than 2 basis hikes in the next year, it makes more sense to be in a variable position. So it depends on your risk tolerance and what you believe is going to be happening in the bond market, which will then translate to the interest rate market, right? They're basically, you can look at some of the stats in the bond market and see what investors think, right? Because investors have some of the analysis, some of the data, the economic data, and what they think is the probability of an interest rate hike in the next 3 months, 6 months, a year, et cetera. So you can look at those bonds and see what they're trading at based on face value. So I honestly think some firms are really bad with their variable rate mortgages. I've seen firms that charged a 5-year fixed at 4% and a 5-year variable at 3.1. With almost a 1% interest rate difference between variable and fixed, that's huge. In that situation, definitely go variable. There's no way there's going to be 4 hikes. And remember, if you go a year before there's 4 hikes, you had a 1%, 25% cheaper, because 1% interest rate on 4% is 25% cheaper mortgage over that year. So even if it becomes 25% more the following year, let's say it goes up from 3.99 to 4.5 or 5% in your next mortgage, you're still ahead because your average cost of debt, your average interest rate over that period is still lower than the fixed in rate. So I've mostly fixed in, but I have one variable mortgage. Going forward, I'm going to be looking at variable rate mortgages, assuming the lender is offering favorable terms. Because sometimes the lender, it's been crazy. I got one from Scotiabank where the variable rate 5-year mortgage, variable, so it can fluctuate with prime hikes. The variable was 3.49 and the fixed was a 5-year fixed at like 3.7. So if there's even one rate increase hike, I'd be better off with the fixed. So I went fixed because I just knew the numbers didn't make sense in the variable. But I've seen other lenders give extreme discounts to the variable rate mortgages. And so just be careful and see what the lenders are offering. I tell all my investors to do exactly that. Get a quote from the broker and find out what they're offering for their 2-year variable, 3-year variable, 5-year variable, 2-year fixed, 3-year fixed, 5-year fixed, and compare them. And sometimes there's an arbitrage opportunity where they have a promotion on. They're trying hard to sell their 5-year variables, so they discount it down to 3.19 or something, right, or whatever to that effect. So just find out what's there, shop it around, and make your decision based on whatever makes sense financially. Jason McLeod, yeah, I'm super excited about Graham dropping me. I really appreciate that. How come Wade's on vacation? I don't know. He's got to live life too, and he has his phone with him, so he does most of the tenant management. So he is bringing that with him while he's on vacation. We're looking to bring some key people onto the team too. We're needing to grow. I am more concerned. People ask me, what are you looking for when you're trying to hire? One, like construction people. If you're handy, you grew up with a handy father or something, you're a handy person, and you have construction background, I can use you. Like right away, if you're honest, trustworthy, and you can be taught, and you're good at construction, I can use you right now. If you know someone, I can use them right now. I'll take them on the team. I could have 10 of those guys in our team right now. That's how much. I would just start buying more distressed properties. I only buy enough that I can keep the guys busy for 3-month periods. So we have a couple of crews running. Could always have more of those going. But if we're talking about hiring someone for a property management position or someone to join the company to do an analyst role, because eventually we're going to need an analyst to be, literally their job would be to analyze the numbers and find ways to be more efficient. So an efficiency analyst is what I'm thinking we would be hiring at some point. But how do you determine a property manager or an analyst, or when you're trying to hire someone like an executive assistant or whatever, how do you decide, Mike? And the answer is always, guys, attitude. Attitude is the number one thing. That hustler, that go-getter, that guy who, as an example, if we're hanging out at like 6 o'clock at my house and we're looking at a deal or whatever, and we just get hanging out or whatever, and we spend 3-4 hours doing that, if you look at that as work, if you see that as like work as part of your job, when you're a property manager or whatever, and we start talking about real estate or whatever, you see that as work, you're probably not the right fit. You just need to love it. It needs to be, like going out to like London on Fire as an example, or going out to a real estate. Let's say it was a real estate meetup because we're talking about real estate business. Going up to the Real Estate Association of London, going to a meetup. If you feel like that's work and networking with people and hanging out, and you feel like, us hanging out on the side after work is work, it's probably not the right role. If you're basically what I'm saying is you're punching in 9 to 5, you're probably not the right person for my team. It's about an attitude. It's about more than just skills. I can teach you what you need to learn. I could put you through the grinder for a year and you could learn how to be a good property manager. I could teach you everything in this business. You have to be smart. You have to be willing to learn. So an engineer kid who can't find a job, who just graduated from school, who's smart, but doesn't have any real estate experience, I can turn you into me. Just give me a year or two, right? So that's more what I'm looking for. People ask, what I'm looking for. And I get a lot of those Instagram DMs. What are you looking for in an employee, looking to hire? It really comes down to, I guess, fit. So whether we get along and enjoy each other and whether it makes sense, we help each other be better people. And fit, attitude, drive, ambition, all those kind of qualitative things. And then obviously raw intelligence. I think you need to be somewhat intelligent to pick things up quickly and problem solve, to be a problem solver. That's why I say an engineer or business student or someone like that who's got that interest. Because you not only have to be smart, because if you're smart and you're lazy and you don't want to do anything, you're not going to do well in this business. You need to actually be driven too to do well and be successful. You think I'm writing 9 offers just because I'm intelligent or just because, no, I grind. I'm writing offers at 2:30 in the morning. I'm grinding up and getting up at 8:30 in the morning, driving to go meet someone for my, I have a mini subdivision development where we're doing four lots, 4 builds. And so I'm working on severing that process, and that's just one thing I don't talk about on camera because I haven't got full approvals from the city. But once I do that, my first subdivision development, we're doing some building. And like I'm writing offers at 2:30 in the morning when I have to get up for 9 to go drive an hour to go meet a few people at a municipality meeting to determine zoning and viability on a severance. That's the kind of hustle you need to have to really succeed in this business, and that's what sets you apart, is being 1% harder working. Someone who goes to bed at 2:40 and I go to bed at 2:45. That extra 5 minutes, I might find that one deal in Kijiji. And so many times I've seen that one deal or that one thing pop up, and that's because I spent the extra 20 minutes there, grinding when someone else didn't. So, welcome to the stream if you're just jumping on, people. I'm going through the questions, going live, question and answer. Brandon Carney, how you doing? Eric's on, good to see you on. Paul Gidge is on too. MeZZ's on. See a lot of the familiars jumping on. Snake Eyes 11. Financial Wolf, see you popping on. Welcome. Okay. Next question. Let's scroll back up here. Don Trend, man, you're the most. I'm gonna read this one. This one made me really happy. I just read it really quickly inside my head. Now I'm gonna read it with my outside voice. Man, you're legit the most real guy on these types of YouTube channels. I watch your videos and I swear I can vouch for my friends to invest with you. You're doing fine, brother. Don Trent, thank you so much. I appreciate that so much. It's comments like these ones that I'm actually going to take that after this. I'm going to, right now, I'm going to take a picture of this. I'm going to put it on my Instagram story. Don, thank you so much. Let's see if I can get that. Whoa, I don't want my, there. That's going on my Instagram story. Thank you so much for you. Okay. Marquise says, hey, Mike, how do I start learning how to fix up a property or understanding how it is structurally? Marquise, very good question. I might have butchered that if I did. My apologies. I assumed the Q was like a K. If I'm wrong on that, correct me. Apologies. Okay, so how do you learn how to fix up a property? I guess I wasn't handy at all. Couldn't even swing a hammer when I was 18 years old, but my first property at 19. And I hired guys to work with me, guys who I tried my best to vet. And when they joined, working for me, I would just watch them and ask them questions. Why do you do it this way? Why do you do it that way? And then, of course, YouTube is fantastic. You can watch how everything's been done on YouTube. And when someone does something different in the real world, you can say, well, why are you doing it this way? When I saw on YouTube, it's done this way. And they'll explain why they're doing what they're doing. And sometimes they're hacks. Probably half of contractors are hacks. And so some of those you're going to say, okay, that reasoning doesn't make any sense, or there's a better way to do this. And you learn from those people who make mistakes. And it's good to make those mistakes. That's how you learn. I've made a lot of mistakes in my time. I built a throne toilet in my basement on my first. We jackhammered the floor and put in a bathroom, and we didn't do the slope properly. And so when it was all said and done, the slope wasn't quite exactly what we needed for everything to run down, all the sanitary, poo and feces and all that to run down properly. So we actually literally built a box, put the toilet in the corner on a box, and I was able to get that extra slope built under the plywood box. And the toilet's kind of set up like a throne. So I called it the throne toilet. Now it's because we didn't jackhammer the floor and dig down deep enough when we were laying down the pipe. And so we made a mistake with that. That's an example of a learning mistake where I was able to, fail, but fail fast and then fail forward. So once it was done and we poured the concrete back, I'm like, something isn't right here. And I had to fire that guy, but we got someone else in there and he said, we can solve this solution. There's a solution, Mike. We'll just build a platform, build it up, get the rise and run that we need, and it'll be perfectly fine. And so in this case, it totally worked out. There are times where it totally works out, right? So that's okay. That's how you do it. Experimentation, repeated attempts and failures. And through failure, you will learn. It's better to learn in a safe environment, but that's sort of trial by fire. That's been the way that I learned. I know people who learn through taking courses. There's probably contracting programs you could take at local colleges, community colleges and stuff. That's one way to learn construction. YouTube is another great way to learn construction. I'd like to do more videos on the overall, even just for my new staff coming on, I'd like them to understand how do you frame a basement, for instance. You got concrete walls, what do you do, right? So first you have you frame it with steel, like you use steel studs, or you frame it with lumber, like construction, typical construction grade pine lumber. So you'd use lumber, right, and frame it. How far do you frame it off the concrete? Do you leave a gap for air? Of course you do. Then do you put tar paper behind that? Yes, you do, of course. Some people just put insulation right in there, and there's no tar paper behind the concrete. So what stops the wood from getting rotted and mildewy and stuff 10 years from now and deteriorating? Well, of course, that tar paper does. And then you have the poly as well, right? The 6 mil poly goes on after the insulation, and then you would drywall, etc. And of course, around electrical outlets and things like that, you'd have weatherproof boots. And then when you poly everything, you tuck tape around all of the fixtures, like plumbing fixtures and electrical fixtures. People don't know this, right? They haven't seen that process done. And so when a contractor doesn't put the tar paper behind, he frames the wall, puts it up, doesn't put the tar paper, throws the insulation on, and goes to put poly on, you think it's all good, but in 10 years you're gonna have to rip it out. Or when he's doing the shower and he doesn't put concrete board and curdy behind the tile job, and in 10 years you're gonna have to rip it all out because it's gonna rot it. These things, these little steps that probably 6 out of 10 contractors miss. I need a guy who can learn that, who's interested in learning that, and then going in quality control checking. That's my job, is to make sure they're doing things properly to the best of my knowledge and the best of my ability. And that's what we do. That's how you learn and you get better. And I find in the beginning, doing the actual work is how you learn. And then now that I've done every job at least once, I can supervise and I can hire out and quote those jobs and get guys to come in and do that work because I've done it so many times. So definitely a big piece of it. But Don Trent, thank you so much for that. As soon as this video is done, I'm gonna share that on Instagram. That was awesome. Austin says, will you consider starting off investing at real estate and growing your portfolio quickly and rapidly today with the current market conditions? Austin, yes, 100%. I would do exactly what I did when I was 19. I would do it today. Now, I bought my first property at 19, and it took me until I was almost 22 before I bought my second rental property. I just saved from 19 to 22, so that you'd think I should be buying all this property really, really quickly. I didn't. Honestly, I spent a lot of time saving and investing before I bought the second property. And learning, of course, with my first property. I renovated it top to bottom, put in washrooms, did plumbing, electrical, everything on this house to learn every piece. So to answer your question, is it still viable today? 100%. But you need to be buying for cash flow. So when I bought back in 2012 and 2015, when I really started investing in rental properties, 2015, 2016 is when I really got into rental property investing and started buying a lot of properties. My fundamental thesis or premise at the time was London has historically been flat. London, Ontario was a flat market. We appreciated like 2% a year. So no, it wasn't like Toronto where people were buying for speculation. I was expecting real estate prices to be relatively flat. I didn't expect things to grow and go up, like what happened in 2016 here, what happened in 2017 here, happened in 2018 here. We've had a bunch of growth. Now, you shouldn't go into investing in real estate with that mindset. I think you should go into real estate planning that the property is going to be worth exactly what you bought it for. That's important. I think that people go in planning for upside and they're not happy. They're devastated because they weren't planning for cash flow and arbitrage. I say plan the market's going to be flat. So tomorrow, if a house is worth 200 today, in a year it's going to be worth 200. So if it's going to be worth 200 today, I'm going to pay 175 for it because I know it's worth 200 today. I don't want to pay market value, right? If I can find a way to add value to it, right? So I say I know it's worth 200 as a duplex. Then maybe I could buy 150 as a single family, spend the money and convert it. And so you got to look at everything from work backwards. The ARV, or the after renovated value, is where you kind of want to work backwards from and say, what is it going to cost me to renovate this property, minus that off? What is my contingency budget? And then what do I want to have for profit margin? You work your way back, and that's what you can pay for a property. So that's sort of the way you work back. And you can determine your ARV by looking at comparable analysis, by using the income approach. The 3 fundamental appraisal techniques that I talk about in one of my first videos, how to get a rockstar appraisal. Great video. Almost no one's watched it, like 200 views. Check that one out. So great question, Austin. Thank you again for watching. I appreciate you, all of you, so much for watching. If it wasn't for you, I wouldn't even have a channel at the end of the day. So I'm super thankful for all the people that are currently watching, 29 of you. Thank you all so much. Smash that like button and share this around if you want to get some free coaching. Pop your question in. Happy to answer everything that you shoot up there. So really appreciate that. Okay, next question. Tommy says, hang on, just lost my spot. Tommy says, what would you do if you acquired tenants on a lease and you want to do a BRRRR on the property? Tommy, great question. A lot of the properties we buy have month-to-month tenants or tenants on lease, which is about basically the same thing. Either way, you need to renovate the property. So you can use an N12 form to say, hey, I'm going to move into the property. That's one option. You could also use the N12 form and say, hey, I'm going to get a building permit to renovate this property. And then you could serve them and say, I need you to move out because I'm going to renovate the property. Now, of course, they're going to have the right to move back in and agreed upon fair market rent, I guess, which is not what you want. But in most cases, if you can line it up right, they'll find a new place to live And when the time the unit comes available, they aren't ready to move in, and so you're all good, and you can rent it to someone else or sell the property. So that's one way. There are lots of other ways too. If they're not paying their rent, if they're behind, you can N4 evict them for that. You can N5 evict them if they're harassing other tenants or doing anything to cause verbal like noise or issues, or they're not being conducive to the overall health of the place, or doing damage to your apartment, right? Of course, stuff like that. You can N5 evict them. You can evict for repeated late payment of rent. I think if they repeatedly pay rent, we got one person repeatedly. They paid rent 11 months in a row late, and we evicted them. They always paid their rent on time, but they always paid their rent, but never on time. And so we just evicted them because you cannot continually pay your rent late. It's not allowed to do that. You can evict them for that. Yeah, but overall, in general, it's hard to evict tenants. So I prefer the N9 and the N11 forms. N9 is a tenant giving you notice that they want to leave. So I make them sign that. I say, you give me notice you want to leave, you're free to go. So I find a way to do that. Usually I have to bribe them with cash or find them a new place to live to get them to sign this paper. But sometimes people they sign it. They're cool. They're like, we just bought a property. I got an example of real properties right now. I think an investor's taken them, but on Rectory Street, there's 2 side-by-side yellow brick houses, big properties, older properties, duplex, triplex, tons of parking in the back, picked up for $175,000 each on MLS, listed for $198 each. So we got about a $50,000 discount on the MLS. And they need a little bit of work and stuff like that, but there's potential here because we're going to get them vacant. And $175,000 each one. It's one of those examples. We're working with the tenants, and we said, look, we want to renovate the property. We want you to leave. We're going to work with you. Pick a day that works for you. So we're being flexible, super flexible. We'll even carry the property till March or April if we need to, the tenant to come out, because we don't want to fight in court. It's just waste a lot of money. Work with the tenants. We got to put cash in their pocket. Whatever we got to do to work with the tenants. We're trying to improve the neighborhood. It's all about the message you have when you come and see the tenant. Most tenants are agreeable and say, okay, you don't want me here, I'll leave. It's the 1 in 10 tenants that are like hanging on. We have one tenant right now at a property. I don't know how we're getting rid of her. She's crazy town. We've tried everything, and we're just going to have to give her money. We're going to pay her out. It's the only way, unfortunately, but that's the last method, right? If you're going to bury your property, you build margin in, you work back from your ARV, you have a contingency budget, you have a renovation budget, you have a profit margin, and you have a price to pay the tenants out. That's it. Budget, get $2,000 off the purchase price, so you can throw that $2,000 towards getting rid of the tenants. Keys for cash. There are some other strategies you can use too, like in a duplex situation, move someone in above them that's even louder and even more disturbing, and run subwoofers, and just they really won't want to live there because you'll make it undesirable for them to live there. Now, I'm not going to say you could do that. I'm not going to say I'm going to condone doing that, but those are strategies people have used in the past that have worked to get other people out. Austin, yeah, I guess to answer your question, circle back, would I do it today? Yes, 100%. I think anyone can buy 5 properties in 2 years. Anyone can get 5 properties in 2 years. They follow the strategy, they work a full-time job, they save, they're aggressive about it, and they 5 properties, $1,000 a month each. That's $5,000 a month. I think I challenge anyone can live on $5,000 a month. Probably live on $3,000 a month pretty safely. So $5,000 a month gives you $2,000 a month to reinvest back into real estate. Anyone can retire in 3 years using real estate. There you go. It's not the safest strategy. Of course, I'd prefer to have some dividend income and multiple sources and streams of income, but you could do it, and it could work. And that's what a lot of people reaching out to me. Our website, by the way, is up if you guys want to check it out. Type it into the chat here. RW, it's still, we got a lot of work to work on it, but rwholdings.ca is our tenant facing. So you guys can check that out. The investors who are watching, kind of see. I'm going to throw up, I want to do a special before the year ends or in the new year on the actual 50 properties that I bought over 50 properties in London, Ontario since 2012. I like to go like just a huge list, like Summit, St. Andrew, Forward, Oxford, Hamilton, Wenlock, Acorn, just bang, 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 address, picture, and then maybe a quick walk, not even a walkthrough, but just pictures of each one. So people could see legitimately. People call me like, Mike, I don't believe you have 50 properties. There's no way a 26-year-old guy has all these properties, or a 25-year-old guy did this, right? And I just turned 26, so I'm 26 now. Yeah, it's one of those things where it just, people don't believe it. So I want to share it so that people can see it's possible. You can do it. I've talked to a lot of old boys who've been doing real estate for 30 years who've got 5 properties, and they're saying, hey, no, you know what? You can't buy that many properties that quickly. It's not possible, this and that. Instead of saying it's not possible, let's ask, how is it possible? Instead of me walking into an open house and they say, and still to this day, me getting told, where are your parents? they should be asking, how are you going to be able to buy this property? So that's all I have to share on that topic. Next question. Do you see a market crash coming? Vinny Trains, good to see you on. You're also a familiar face that I see jumping in. I don't really see a market crash coming per se. I see a slowdown coming. I see average days on market increasing. We're seeing, it's the time of year though right now, so December is a bad time to judge that because it's always slower in December. It's the buying season. That's why I'm buying so hard. It's a good time to buy. People don't want to shop. It's getting close to Christmas. Anyway, do I see a recession coming? Like in London, one of the negative things right now is if Trudeau cuts the Saudi Arabia deal, it's going to hurt General Dynamics. They make a lot of tanks and stuff like that in the army equipment, military grade stuff. That would hurt a little bit. It's not enough. Like London has so many diverse employers and pieces of their economy that no one thing is just going to crash the economy. I think we would just see a bit of a slowdown. And what that means is I get to finally get back to negotiating on good deals on properties. I actually look forward to that. I don't want a hot market. My investors will love me the most when I deliver extraordinary returns in a recession. When I deliver extraordinary returns in a flat market, that's when I look good. Because everyone else, all these guys who are, basically, what do you want to call it? Focusing on gentrification and speculation and appreciation, basically just speculating on deals. And they're not cash flowing, they're not arbitraging. Those guys are going to get burned. And all the people who look really good buying property, which is anyone who bought any property in Ontario, all of these people are going to look really bad. When, how do you tell, someone makes a joke, how do you tell a good flipper from a bad flipper? You know what it is? Yeah, sorry, in a bull market. You can't. You can't. You really honestly can't. It's hard to tell the difference no, sorry, I screwed that joke up. How do you tell the difference between a good flipper and a bad flipper? Wait for a bear market, because the bad flipper will be bankrupt. People, you can lose a lot of money flipping property. You can lose a lot of money buying and selling property, especially after transaction fees, and people underestimate the renovation work that needs to be done, or you come into surprises you didn't expect, which always happens. Like contingency budget is really, really important. Yeah, at the end of the day, it comes down to the smart investors will persevere. So that's my advice. Coming into a recession is find a really good real estate strategy that's recession proof, or partner with someone who knows what they're doing. Because what I found is that I've met investors who wanted all the deal for themselves. They're being lone wolves, they're being greedy. I have partners who, after my cut of the profit and my fees or whatever, for my cut of the profit, they're still doing better than the person who bought whatever the real estate agent sold them. They have a higher rate of return. That's my job. My job is to deliver more than what I'm taking in fees. So when I take 15% of revenue, that's my cut of the profit. I'm not doing 50-50 structures like most people are doing. Not to say there's anything wrong with those strategies, but this is just my model that works for me. I have to deliver that much more. If I bring you a property worth $300,000 for $200 today, there's $100,000 upside. You don't care if I get paid $40,000 and you get paid $60,000, because you just made $60,000 that you wouldn't have otherwise made if you had to buy at market value. And so that's where it's about bringing value. The fee discussion doesn't even matter when you bring that kind of value. If I can deliver minimum 25% return on investment, I'm sorry, there's no hedge fund that delivers 25% every single year. If I'm delivering those kinds of returns, it doesn't matter. You don't have those conversations about a fee structure. And you want your property manager and you want your partner to be making enough that they don't want to walk away, right? You want them to be making some money too. So set up win-win situations. And when you're setting up JVs with friends and whatever, you want to make sure you're being fair about what you're doing at the end of the day. Would you take a variable interest rate on your mortgage if you're trying to refinance a property within 6 months to a year? Telling you what I would do is probably take a 1-year fixed term and then refinance after 1 year. So very important to be selective about your interest rate term, or do a variable rate mortgage so you only pay the 3 months interest differential. When you break out of the mortgage, you put a new one on. I've had some breakouts on my mortgages, and that's okay. You just build it in. It's going to cost you 3 months interest penalty. So 3 months worth of interest payments you're going to have to make to break out of the mortgage. That's not a huge deal, plus a discharge fee, a couple $100. There are some fixed rate mortgages that you have to be very careful of where they have huge penalties in them. And so just be careful. I've been really lucky. Most of the banks that have underwritten my mortgages have been very fair. So when I had to break my mortgages, when I sold 11 of my properties off, I was very fortunate in that my breakup fees were not bad at all. They were very, very favorable. Michael Chung, 9 deals in 9 days. Is that a new record? And probably not. I don't know a lot of guys. I don't know if anyone in Ontario is acquiring properties at a rate that I am. I think I'm probably acquiring properties faster than anyone in London, Ontario right now, in a 500,000 city. Now, if we keep this pace up, we'll become a top dog. We'll become, a Terry Guys of Ivy Homes. We'll become one of those kind of guys, and I can't wait because we can deliver way better returns because of our strategy. Now, people could mimic my strategy and do what I'm doing, but no one is. No one's competing against me directly in the market right now, doing exactly what I'm doing, thankfully, and I don't think anyone could be me exactly. We have systems in place that other people don't have, and honestly, if someone else is doing it too, that's even better. More returns for everyone. So it doesn't matter as much to me about whether I'm the biggest or not. It's sort of an ego thing than anything else. My real true goal has to be about helping people unlock a wealthier them, right? And reaching financial independence. And that's what this company is founded on, was better returns than what people are currently getting, and better property management and more turnkey, because that's what we're really after, is providing a solution where the investor doesn't have to worry about anything. And that you can't find a property manager in the industry that's doing that. It's giving you the deal right through to the sale on that property or the refinance on that property. Full experience, right? The full service. So yeah, we're not competing against property managers because we're not doing that. We're not competing against realtors because we're not doing that. We're not I don't compete against any one thing, and I don't even have a challenge competing against REITs because the returns are terrible comparatively. William says, why? Paul Gage says, hey, how you doing? Michael Chung says, you're live. Awesome. Still live. What's new, Mike? Hey, Mizizi. How you doing? Thanks for answering my questions, Michael. I'll catch you on the replay tomorrow. Awesome, Don. Ryan Weiss, Toastmaster, says, hey, Mike, big fan. Ryan, thank you so much. I appreciate that. Toastmasters is fantastic. I'd love to join that at some point. Even just doing YouTube has helped me a ton with my ability to speak publicly. When I spoke last year at OREC in 2018, that was a big thing, me getting on stage and talking to hundreds and hundreds of people. It was really, really cool to do that. I think that, I think that, the more you practice, the better you get at something. And so I'm getting better and better. I'm not an extrovert. After I talk to people for some time and do some networking, I get drained, I get tired. I'm very much an introvert at heart, and I recharge my batteries when I'm hanging out alone or chilling with like one friend watching a movie. That's kind of just me. That's how I be. Eric, how you doing, Eric? Good to see you on. Brandon Carney says, Mikey, always looking forward to Wednesday nights now. Brandon Carney, thank you so much. I appreciate that. Thank you for joining the live stream. We've pretty much held almost 30 people this entire stream, so I'm super thankful for you. Your guys are my core 30, and there's about 150 of you or 200 of you that watch the replay. And so my core 200 that watch this, thanks so much, because this is not entertaining content. It's very dry. It's just me talking. You've got to be, I think there's like a general audience who are interested in real estate, and there's like another layer of people that are sort of, maybe real estate investors, and then there's like the core group that actually care enough that they want to watch an hour and a half of me talk about specific things like how to evict a tenant. And so, sorry, my hair looks like a mess, guys. I shouldn't have looked at myself. Don't look at the camera. That's the first rule of YouTube. Don't look at the screen of the camera. So that was my overall spiel about being thankful and being grateful for the people who are on here. You guys know who you are. The people who are my investors, the people who are my loyal subscribers, thank you. I appreciate you, and I will not forget you guys when we're at 100,000 subscribers. We'll still be probably going live, and it'll still probably be just you, 50 people on. But maybe you never know. We'll get a few hundred people on at some point. That's a goal, obviously. But I continue to see you in the chat, and I appreciate the support all the way through. Snake Eyes 11. Do you always negotiate the interest rates? What rates are you getting right now? Go to ratespy.com, or I think it's .com if you're in Canada, and you can see they actually spy on the rates. What are the best rates you can currently get right now for different rental properties or for your personal primary residence? Definitely always compete on the interest rate. They can always do better. So just ask. At a minimum, I make sure my appraisal fee is covered, is comped. And if you're doing a refinance, at a minimum, your legal fees should be covered on a refinance. That's important. They want to keep your business. They'll do that for you. Same is true if you're moving banks. They will pay for you to steal the business from another bank. They will pay for you to refinance that mortgage over in most cases. So yeah, definitely ask for a better interest rate. Does not hurt to ask. I was in a position when I bought my house where I didn't really negotiate very much on the interest rate. That was because there wasn't much play. I was approved without any income testing. I had no real income, and they did a net worth mortgage, which, yeah, there's less and less of those going around right now. I think RBC is the only one doing it. CIBC was doing it for a while. They still can do them with a bit of income, less than the income testing rules. But if you have net worth, it's fairly good. You can still get mortgages. Scotia's not touching it. BMO's not touching it. Their net worth program sucks. It's only for like your primary residence, and you have to have like less than 3 properties or stupid rules, and you still need income to qualify. Now less income, albeit because your net worth is higher. Yeah, so definitely always negotiate your interest rates. Financial Wolf says, I'm late. Ugh. Hey, no worries, man. That's why we record everything, so you can watch the replay. We're over an hour now. I got to get home and do bath time with my daughter. Family is really, really important. And if you guys have noticed, I've changed now to a Saturday upload. Saturday at noon EST has been the time I'm targeting for. I'm going to play with that a little bit. I'm going to try some 10 a.m. uploads. I'm going to try some 2 p.m. uploads to see when the traffic is better, just because I'm curious. But I'm going to do one live stream on Wednesday. You're going to get to see an upload from me on Saturdays. I may throw in the odd video here or there unscheduled, but I'm trying to keep that cadence because family is really important. I've been burning at both ends, and I need to spend more time being a good dad. And I think family values are something I preach. I need to practice what I preach and put family first. And so that's why I've gone down to the one video upload a week. And we're going to provide better quality to you. If you noticed in the last video, there's better editing, animations and things in there. We're trying to throw in some better overall quality for you there. So that's one thing we're trying to do, definitely. Brandon Carney says, I'd love to talk privately, helping with your renos and property managing. Yeah, definitely shoot me a message. Are you down for a property breakdown? I can do it really quick because I got to try to wrap this up. I'll swing back this time. Tom Sullivan says, hey everyone. Hey Tom, good to see you on. Jason, how you doing, Jason? Good to see you on as well. You're a regular. William, Mike, is there a general contractor license in Canada? Did you take the exam early on? Can you explain how you did the permitting and hired or fired the right people? Thank you. William Burkett, I did not ever take the general contracting license. There is a license in Canada. I've never taken it. I've not been educated. I am not a licensed general contractor. I've just worked with a lot of subs and I've renovated like 50 properties. So I've just done it a lot. I am by no means an expert. I've just done it a lot and watched a lot. So there's always places that I can improve and learn, and I'm getting better. My key was cost control. That was something I was really good at that most guys weren't focused on. They'd have 3 guys on site and 1 guy standing around. I try to just be way more efficient. It's the reason Ellis Dawn contracting company, shots fired, spent what 150 million shots fired on the Ivy building it when it should have cost probably $80 million, because people just don't enjoy contracting work for the most part. It's shitty work, and guys stand around a lot. That's just the nature of it. They talk a lot. They don't get a lot of work done. Michael Chung says, so knowledgeable, man. Mike, thanks, Michael Chung. Appreciate that so much. That was a great comment. Definitely going to share that one too on the Instagram. Brandon Carney says that place is a hard C-class property. King Edward is a pretty rough area. Phil, let's take a look. I'm kind of curious now because I mentioned King Edward earlier. Why don't we try and bring this up? What's the address? Let's see if I can't bring up this laptop here. Again, not my laptop, using Kyle's laptop right now. Let's see if we can't do this. Going on. I don't have screen share, but MLS. Is it 81 King Edward? Is that right? Attention investors, currently building is fully rented, compromising of 4 2-bedroom units with the possibility of adding 2 more basement units. Solid brick building is located in a very desirable investment area. Let me tell you about King Edward. It is not a highly coveted investment area. King Edward is a shithole. If you live in London, you know King Edward. You don't want to live on King Edward. Tons of druggies, prostitutes. It is a rough street. You used to be able to get 12 plexes for that price a couple of years ago. So I don't know why they're marketing to Toronto buyers. We're seeing some 12 plexes on King Edward. Like there's 100 and something. What was the address? 100 and something King Edward. I'll list it for $9.99. And I'm so thankful to one of my investors, Max. Shout out to you. You didn't go out, and you actually had offered on that property. And he said, Mike, would you come take a look at it and come to an inspection of this 12-unit building? And I spent, the better part of half a day going through this property with him. And most of the buildings they built there so quickly, they slapped them together. A lot of them have water leak issues. A lot of them have foundational problems. A lot of them are stick framed, not concrete, so the sound transmission between units is terrible. They're old, tired buildings in a bad area of London. Now, if you were getting a 10 or 12 cap rate, that could make sense. 480,000, Brandon, let me do some numbers for you. At 480,000 in this area, we can get you like 5 houses that'll cash flow positive 1,000 a month each. You could have 5,000 a month in your pocket. You can have this piece of shit that'll give you like $1,500 a month. I haven't even looked at the numbers, but I don't even need to. That'll give you like $1,500 a month in profit. That was yeah. Sorry, I was a bit blunt there with that property. Not a great area. Out of town real estate agents just don't know. This is a really bad area of London. Notoriously really bad street. It's like one of the roughest streets in London, in my opinion. Like if you were to bring tenants and try to show tenants. Anyway, to tell you that story, anyway, he ended up pulling out of that deal because the numbers made no sense. My investor, I said, man, we can go buy 2 single family properties for 400,000, get you the same cash flow as you're going to pay on $1 million on this building. And I'm telling you, this building is not worth $1 million. It had a number of structural issues and everything else. And it's funny because I spent a half a day doing a free home inspection. Now, I'm not a home inspector, but I can tell you if a roof's bad. I can tell you if there's moisture issues. You know, we walked with the home inspector doing the exact same thing. He charged him $2,000, I think, something to that effect. Most commercial inspectors charge $1,000, $2,000 for a couple hours to walk through a building, and they do a fancy report. I found a lot of things they didn't find. Now, because most of them are trained not to kill the deal, right? The real estate agent will bring in the commercial home inspector who's not going to kill the deal. I do all my home inspections for my investors to the best of my ability. Now, I don't catch everything, but that was a live deal analysis right there. I have not touched that property, the 10-foot pole. If you want a sixplex on King Edward, I know of a private one for a couple of $100,000. It's a real piece of shit. For half this price, we get privately. I mean, if you want, let's talk offline. I can get you some. I got some landlords who are really tired of properties here. You could buy properties here. I don't want to manage them. Honestly, truthfully, I don't want to manage them in that area. I do have to go up and finish these questions, though. Hopefully that helped. Just saw a cool message come in. Thank you for that, Mark. Appreciate that. Come up on my phone here. Okay, let's keep going with the questions here. Thanks, Phil. What is the better neighborhoods to stay in? So, Brandon, yeah, I could definitely tell you some better areas. Downtown, you're good. Anywhere north and west of London, you're fantastic. I live north and west, and great area. There's no methadone clinics. The roughest area in all of north and west is probably White Hills, and even there, it's not even bad. You can walk the streets and feel fine. You walk the streets in East London there, and you'll get jumped, mugged, and stabbed in certain areas of East London. So just be careful. Unless you go really east, like past Gore Road, and then you get into really nice houses that are far enough out. They're far enough away from the government check clinics, the government offices where they get their POGI checks, their social assistance, their Ontario welfare, their disability checks. Most of these guys are used to scamming the system for income, right? So they're doing drugs and they're collecting these handouts, and these people live there, and they're very. I looked at a fourplex today on Dundas. Rough property on the MLS. I wouldn't touch it, unless I get it for half price, what they're asking. But it was a really tired building. No one's done any maintenance on this property for 20 years. The water leaks have rotted the joists, and so the structure has given way just from delayed maintenance for so long. The problem is there was no money in these properties, and the tenants don't give a shit because the landlords don't give a shit, and so the whole property just goes to crap. You put in you go buy this property, you put in new windows, and tomorrow they're going to throw a rock through all your new windows. That's the problem with that area, is you can't make it nice. It has to stay bad because the quality of tenant just destroys the unit anyway. You make a brand new unit and they destroy it in a year anyway. There's holes in the walls and they don't care for their things. So that's the problem with buying in the bad areas. Not to say I don't buy in the bad areas, because I do. I just place the utmost importance on tenant screening. Tenant screening is so important, guys. You've got to be putting in the best quality tenant you can in those areas. Very, very important, because you get bad tenants in there, it's going to cost you a lot of money. You're going to lose a lot of money. But yeah, overall, okay, Brandon Carney, that place is a hard C-class property. King Edward is a pretty rough area. Phil Williamson knows what's up. Pretty much exactly my thoughts. Hi, Mike. What job do you work when you're saving for real estate? Robert Morrissey. I worked as an analyst. So after graduation at 21 years of age, I did a 4-year business finance and accounting degree at the Richard Ivey School of Business, which is the top business school in Canada. It is ranked, I think, in the world up there with Harvard and some other really, really good business schools. So one of the best. Paid a ton of money for the schooling. I don't know if it was worth it. I guess we'll find out. Longer term, if the network plays that they claim are going to help me later on are actually there. I don't know. I went to school with people like the McCains, right? Like McCain Fries, billionaire families. So maybe someday that'll help out. The education is top notch. Is it worth 500% regular education, regular university education in Canada? I don't know, because tuition's like $6,500 versus like $28,000. I don't know. So I graduated, to answer your question. I graduated at 21. I took a job I was working at KPMG in accounting, and then I switched and quit and took a job in consulting, making a little bit more with more flexible hours. It allowed me to focus on investing in real estate, actually. It was a nice job in that sense. So I made $50,000 a year. Full disclosure, I made $50,000 a year. I was an analyst. They called me a consulting analyst, but I was really just an analyst. And I wrote white papers for a living. You guys know what white papers are? I did research, and I wrote research reports, 100-page research reports. And then I made interactive PowerPoint presentations on those complex IT topics. So I brought business and IT together, and I helped IT departments become more efficient. So I wrote on things like how to do cloud computing more efficiently, artificial intelligence, the Internet of Things. I did specifically write about leadership development enhancement. So I actually, in my second year, got promoted to senior analyst, which is great to get promoted, made $55,000 plus bonus. And then we started a division called the Leadership Enhancement Acceleration Program. And I was the second employee in that division at that time. One of the first. I was tapped on the shoulder to work with the senior VP directly, which is a great honor and a lot of work. And we built the Leadership Enhancement Acceleration Program, LEAP. We put on events. So we did events in New York, Toronto. I did some consulting engagements on the side too. And we taught leaders of the C-suite, like the CIOs, how to be more functionally, to integrate with the other functions of the business, and how IT can go from becoming a cost center to a profit center. And so in the process of that, I got promoted to manager and had a small little team I was working with. And that was really cool to be a manager and doing a lot of the same stuff. I did a lot of sales stuff. I did most of my job though was logistical in nature and analyst in nature. So I did a lot of analysis and I wrote a lot of content that we presented in the program. So we developed 6 different booklets related to teaching how to be better leaders, how to functionally increase the ability to lead people. So I worked in the leadership enhancement division, and that was 3 years of my life. Promoted very quickly. To make it to manager that quickly was something I had to keep the real estate kind of hush-hush on the side. And then I was at a point where I was making more for my real estate. I bought a couple more properties and realized that I could actually make more doing real estate investing full-time than I could at my day job. And I wanted to retire. So at 24, which was in February of 2017, I quit my job. And it's been about a year and a half. It'll be 2 years this February since I've been employed. So almost 5 years now since I graduated school. Yeah. Hope that helped. Hope that answered your question. $55,000, $60,000 a year was my salary, 50, 55, and 60. So if I can do it, you can do it too with an average job. Just buy some real estate on the side, be very, very frugal, house hack, and reinvest everything. And you'll be well on your way. Without any of the appreciation gains that we had in this really good real estate market in 2017, just after I sold most of my properties, unfortunately, I probably saved, I was making a lot from my rental properties, right? All the rental income, $1,000 a month, times about 6, 7, 8 properties. I was banking all of that every month, plus all my salary. We were living on half of my wife's $36,800 salary. So it's $37,000 a year. We were living on half of hers. Very, very frugal means of living. And so what that allowed us to do is save all of my salary and all of the rental income. And that snowballed really quick. Check out my video, how to get 10 properties in 3 years, the Rosehart real estate snowball. Someday I want that to catch on where everyone's like, oh, are you doing the Rosehart snowball? It's like, I'm going to try to make some more videos about that. So eventually people will just say, hey, the Rosehart snowball. Because I am I bought 30 properties this year. I believe in fast growth. And when you do something, you should do it all in. That's just how I am. Brandon Carney, Mike can handle the C-class tenants. This is true. I've taken D-class tenants, and I can evict pretty much anyone. Not that I want the challenge, but could definitely handle them, could definitely do it. Dominique Chenard, good to see you on. Hey, she says, hi, Mike. Do you recommend people starting with smaller properties and working their way up or jumping into multi-unit and JV right away? Dominique, it depends on your risk profile and the type of person that you are. If you're a busy executive or you've saved up a few $100,000 and you don't want to be dealing with tenant evictions and all that kind of stuff, If you were me a year and a half ago, I was looking for a right way management for an RW Holdings, my own company. I was looking for that. I couldn't find someone who could do a full turnkey everything. I would have happily done that and just traveled and enjoyed the time with my family. Because it didn't exist, I built it. I built the company that allows people to get 25 to 50% ROI, sometimes way more, 25% plus plus plus, because no one was doing it. Because there were no competent property managers. They would all call me, and the buck had to stop with me. And so I ended up micromanaging and managing the manager, which didn't free me up to do what I love. So it depends on your goals, right? If your goal is to build your own business, and you're doing, Dominique, you're focused on maybe your financial planning business or whatever you're doing, and you want to grow that, and you maybe don't want to deal with the tenants, it might make sense to partner with someone like me, or find a friend who's handy and you want to partner with them, or whatever, right? It might make sense to do a partnership where you don't have to do a lot of the work. You can get still a great return for no effort. Your return on effort, your return on time will be fantastic, really, really high. Something to think about. It's up to you. I do recommend starting smaller. Don't get into big buildings right away. It just doesn't make sense. Max out your personal residential mortgages first, then move into commercial properties. That is a natural progression. You get way cheaper financing residentially. You get cheaper property taxes. You get cheaper insurance. Just everything's cheaper. Residential appraisal is $350. Commercial appraisals like $1,500. So it's just way more cost associated with commercial. Max out the personal stuff first, then go commercial. Commercial, when you buy commercial real estate, you don't need residential financing. So someone who has no job, can't get mortgages, they can buy commercial property. So some people talk to me and say, I don't have a job, I can't get a mortgage. Then we should talk about getting commercial financing. But if you can get residential financing, get that, max out those 10 mortgages you can get with Scotiabank. 10's the max personal mortgages that I've seen. You can get some more with credit unions and stuff. Like I squeezed out a few more than 10. Today, I would say still the most you get is probably 13 or 14. 10 with like a bank like Scotiabank, you get a couple of TD, BMO, whatever, and then 5 or 6 with Scotiabank, you'd be at your 10 personal mortgages, and then you can go for probably 2 or 3 with a credit union, maybe 4 with a credit union. So I'm going to close this King Edward because King Edward's a really terrible property. We still have 29 people here. That's awesome. Thank you all for staying on. I appreciate you. I do have to get home and do my daughter's bath time and bedtime routine. Very important. My daughter falls asleep by like 9:30, 10 o'clock. It's a battle every night. But yeah, I hope that answered your question, Dominique. Austin says, much appreciated, brother. We appreciate you. Keep killing it. Just more inspiration for people like me to get started off in real estate. Definitely, Austin. Thank you so much for that comment. I appreciate that. And I don't even know how to say that name. You get about it. Forget about it. I like that, actually. I do like that name. Long, but good. Popped in here from Graham's video. Thank you for real estate insight. Hey, man, no problem. I also do a lot about personal finance, too. So if you want to become a wealthier you, check out how to spend less, earn more, and maximize returns. I do videos on all of that stuff, financial independence and everything. And thanks so much for jumping in. Really appreciate it. Yeah, let's get a couple of questions here out of the way, and then I'm going to wrap up this video. Thank you for coming over, by the way. Hey, Mike, if properties are bought using T4 income for debt service ratio and then you leave your job, can lenders call the mortgage? No. Philip Robbins, great question. No, they don't ever call them a mortgage. I had 14 mortgages, quit my job. It's totally fine. Or is the biggest downside being stuck renewal without lender? So at renewal, they will send you an automatic renewal with a rate, and you just go back and negotiate a bit on that. There's no requalifying. I have 3 properties coming up for renewal in February here, and I'm going to get them renewed no matter what, and I have no income at all. So once you have the mortgage, you're set. That's why I tell people, some people might close 3 properties at one time with 3 different lenders. Once you have the mortgage on the property, they can't take it away from you. They don't call it. They want you to pay the mortgage. So you'll be totally fine. Jason, Mike Holmes. Mike Holmes goes a little overboard. I'll be honest. His cost is out of control. I've seen him spend $100,000 on a project when it should be spending $50,000. I think I'm probably the in between. I like to do things right. I like to do things properly, but at the same time, I'm very focused on cost control. So there's a way we can cut a corner without it having any impact. That's okay. That's all good. Like if it's not going to bite us in the ass in 10 years, no problem, right? If we could frame 24-inch on center instead of 16 on center, and there's no real impact on an interior closet wall or something, we're gonna do that to save some lumber. With some good cross bracing across. That's a way you could save a little bit and have no impact. There's no structural issue with that because it's not a load-bearing wall. There's places we can cut. There's redundancies. I think there are better ways to do pretty much anything. Yeah, it's a great question. Richard Chambers says, I like Philip's question. This is Dominique still. Yeah, good. Good points. Good points. Hopefully I answered your question, Richard. Hit that like, everyone. Jonas, you know what's up. You're always getting everyone to smash that like and share it in their social media groups. Thanks so much. If you have someone who's looking to buy real estate, share this series with them. I have a playlist now. We're 29 episodes. There's 40 to 50 hours of just me giving all of the knowledge and pouring it out in an authentic, unfiltered manner. So you'll get the true raw deal experience from a real estate investor. Perfect analysis, Mike. Thanks. Appreciate that. It was blunt, and I'm sorry if you own properties on King Edward. It's okay. It's okay. I'm sure you're still making cash flow. We can do better next time, though. Do you have rentals in White Oaks? Michael Chung asks. No, I don't. I don't have any properties in White Oaks. Just never had a good deal there. Don't love the area that much, to be honest with you. How did you meet your business partner? Brandon Carney asks. I met him in Ivy, actually. We were classmates in 2012, so we've just been friends, and we separated after graduation. We didn't talk at all, hardly. And I guess 2014, 2015, 2016 went by, 3-4 years. I hadn't heard from him much, the odd message here or there. We would trade stories. We both are value investors, so we would trade stories about different strategies related to buying and selling stock. And then he saw me post something on my Facebook about me buying property and getting, 40% rate of return just from rental income. Forget appreciation. And he's like, holy shit, I need to come down here and see this. So he came down and spent a couple weeks just hanging out with me, seeing that the properties were real. And then his parents gave him much money and he invested here with me. We did a bunch of joint ventures and kind of turned into this whole thing. We have this huge business now. That's kind of cool. We've built this awesome business. We've got, I don't know, investors must have like 27 properties or something now. And our goal for next year is my goal is 75. I have like 100 properties in London in the company. And so our investors all basically financially independent, and then we'll bring on some new investors and make them financially independent too. And they can do that without having to have a really good return on time or return on effort. Because that's what it's been about, is creating that lifestyle of freedom. Because managing your own properties is not really freedom. I don't enjoy managing properties. I don't manage the properties. I manage people to manage the properties. And that's the idea, is getting the systems in place for this business to run itself. I do a lot of work to build this business now, but in the future it'll be more self-sustaining. Thank you, William. Appreciate that so much. That comment means a lot. Looking forward to Wise Wolf. What did your wife do for work? She was a graphic designer in a marketing department, and she actually got let go. Two companies merged together. She got let go, unfortunately. She's off work for 4 months, and I'm so thankful that we're as frugal as we are. I think I'm back. We're back. All right, guys. I need to wrap this stream up. It's 8:38. I got to drive home yet. We're in the tiny house, so sorry about losing audio for the last 5 minutes. Talking about resources and methods to determine rental costs. Resources, I guess. Kijiji is a good place. Talk to people. Talk to local real estate agents. Post ads. Get a feel for what market rents are. Talk to other real estate investors. Bring in contractors. Get 3 or 4 quotes, and you'll get a feel for what the cost is when you bring in each individual contractor to give you a quote. You can get a feel for what market price is. You could sub it out, so do it individually, or you could bring in one guy who does everything. It's usually more expensive to do it that way, but Jonas says, sup, Kyle. Snake Eyes 11 says, no mic, lost audio. Sorry about that, guys. I thought my amp blew. All right, I'm going to wrap this up. Sorry about losing audio. That was kind of awkward. But we're all good. 25 people still stayed tuned. Thank you all for watching so much. I really do appreciate all of you. Tune in Saturday. It matters a lot when I drop a video at noon this Saturday. I want all you guys to watch it. Keep an eye out for the notification and watch it. Smash the like button, watch it all the way through, and then click through to my next video because that helps YouTube think that the video has good content. Tricks it into thinking I actually make good content. And then it will recommend it to other people to watch and send it out to my subscriber base because my subscribers won't even get it unless they click the notification bell. Even if they click the notification bell, they will not get the notification unless the first 100 that it tests the push out to actually enjoy the video, right? So then it'll push it out to a wider audience and promote it. So it's all about whether you guys enjoy the videos or not, about how well they actually do. So I'm going to put some effort into that. This one's going to be a Christmas special, so check that out. And yeah, I got some really big plans. Tomato Tree 15. Everyone predicting a recession before 2020. Is it worth it to get a real estate license? I just got mine. So I'm 21. I come from a real estate family, but they won't help me. Oh, no. Send me a message in the comments, and I'll happily respond right after that time. Have a great evening. See you later, guys. See you, Jason. See you, Phil. See you, Andrew. Thanks, everyone, for joining, and I appreciate you all so much. And I'll talk to you in my next video on Saturday, and then my live stream just after Christmas on Boxing Day. So I'll see y'all next week for the Wise Wealth Show. As always, to unlock wealth through you need to spend less, earn more, and maximize your returns. In that order, those are the 3 levers you have to play with. You can spend less, you can find strategies to earn more, and then you find ways to maximize your returns once you found a way to earn more, spend less, and save that money that you can invest it. Those are the 3 levers. That's all I talk about in this channel are strategies to help you spend less, earn more, and maximize returns. If you're new to my channel, thank you for joining and welcome. Bye. End this live stream.